Well, the holiday cheer definitely has shoppers this year, and that's according to the November retail sales report that we got today. It's Tuesday, December 17th, and we just wanted to discuss a little bit about the economic data we got this morning and then what we see for the Federal Reserve meeting tomorrow. This will be the last meeting of 2024, and it's highly anticipated that they will cut interest rates. But first, let's talk about retail sales. At the headline level, retail sales came in a bit better than expected, and they've been increasing now for the past 3 consecutive months. Now, that includes everything from gas to autos to food to building materials. So we like to strip out a lot of those volatile items to get what's considered a control group, a true core number. And that true core number actually rose 0.4%, which was in line with expectations, and that was after declining last month. So November hasn't slowed the consumer down whatsoever. It's showing that there is strong holiday shopping season coming into the month of December. Now let's break down some of the details there. Now primarily this was led by auto sales, and it's not surprising there at the end of the year you tend to see auto dealers try and discount some of the inventory so they can bring in the future year's inventory. And also remember that interest rates did decline a bit, so it brought some of those buyers back into the market from the auto perspective. And some of the other categories that were strong were sporting goods and then internet shopping. That was a big driver. If you look at a lot of the other categories, whether it's clothing, department stores, general merchandise, these were all negative for the month, but internet shopping jumped off almost 2% for just the month and is up 6.5% over the past year. Now, remember in November, we had not only Black Friday shopping, but also Cyber Monday. So there was a lot of discounts from the internet standpoint, and obviously a lot of shopping going on too. So what does all this mean? The equity market is weak today. Sometimes when we start to get really good news, it's not good news for the markets because it means that the Fed has less flexibility. And we think the Fed will still cut interest rates by 25 basis points tomorrow. We think it's way too telegraphed. It's widely expected. We don't think the Fed's going to disappoint on that. However, we do think they've kind of painted themselves into a very difficult situation because what they've done with cutting 50 basis points and then cutting at every meeting since they started this easing cycle, it is starting to reignite some of the inflation pressures. And what we're seeing today with these strong sales from a retail standpoint, it's not cooling the economy the way that I think that they had anticipated. So I think they'll come out with a more hawkish tone tomorrow. That means they'll come in telling investors, don't think that we're going to continue with rate cuts into 2025. We're very data dependent. We think the outlook for 2025 is a lot less clear. We think they'll probably be on pause for at least the first quarter until they get some more confidence that this inflation uptick we've gotten recently is not sustainable. That's all that we have today. If you like this podcast, please subscribe, hit that alarm bell, share it with your friends or colleagues. And then if you'd like a history of our podcast, you can always go to marketswithmegan.fm. We'll be back tomorrow to discuss the Fed meeting after we get the results.